What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 6th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to not only dive into the recent move we've seen here over the last 24 hours, where Bitcoin is nearly up 5% and trending higher as we speak, as it approaches the upper band of the sideways channel it's been in for nearly a month now. But on top of that as well, I want to spend some time to focus on the longer term time frames and really try to ask a big question. Have we finally seen a bottom in the market? Or more specifically, should we be expecting a higher charter in price over the coming days and weeks? A significant one that could recoup a lot of the losses we've seen in the market. We've got a lot of things to dive into in today's video. If you guys enjoy it, consider dropping a like. It's a big way to support the channel, and let's go ahead and kick things off here. Now, as we can see here, just in the last 24 hours, after a couple days of neutral price action, where we had come down here and sold down a lot of the gains we had back here on May 30th at the close of the month, we can see here that we're yet again approaching the upper band here. Now, all the while, I am going to be spending some time to talk about some really interesting charts that might be signaling here that we're ready to break above this band. I do want to, again, emphasize what we talked about in the last video. We don't want to get too confident in either direction. We're going to be waiting in this case to make additional positions and really start to make adjustments to our portfolio if we really get a substantial close above or below either of the ranges. So again, I'm not saying to FOMO in or anything like that. Let's keep rational, let's keep level-headed, but I do want to signal as to why the facts might be pointing towards a break above this range here, okay? So first off, there's a couple different things here. We've not only got higher lows here in this case in price, which again is not enough just to go off of, but it is showcasing here that buyers since this capitulation candle have been keeping price elevated each and every time, as well as the highs. But on top of that as well, here on the daily hour side, we've been trending higher here and starting to see here that we've been able to make the average here, the SMA, a new range of support. Price has been testing this range a lot more over the past week, but I don't want to again just look at the short-term timeframes. I want to take a look at the macro picture. I want to take a look at equities. This is the NASDAQ 100 here. A lot of the tech stocks that got battered here and climbed down an overall 31.5% in valuation, now getting above and making support on previous resistance. And this isn't just short-term resistance, but it's been a significant price range from the past. If we zoom back here towards back through 2020, here to March of 2021. This range served as consistent resistance many times here in the past and was a point of previous capitulation once we had gotten above that range. This was the significant price range we talked about not only here on the channel, but also within the Dash report. And now it seems like all the while there has been some chop here, similar to what we saw in Bitcoin the other day. At the same time, we are holding this range. Buyers are coming in each and every time, and they're not waiting for price to come down here. This is a sign here that the macro environment for equities may be getting more excited, probably due to the fact that all the while the Federal Reserve is probably going to continue to increase interest rates. It is probably not going to get harsh on quantitative tightening. Again, we dive a little bit more into this within the Dash report where I go more into the macro analysis here of the Fed, but I think the probability of the Fed utilizing QT here in the near term just isn't that likely, or at least to a heightened degree that's going to punish equity markets at these valuations. Take a look at the volatility index here as well, and then we'll kind of dive back into the measurements for Bitcoin. We can see here on the VIX here that we haven't set a new high or relative high here for the VIX since back in February. We really never got there back in May. So we've got a divergence here for the VIX here. And on top of that as well, this general range here, which has proved as previous resistance in the past and as support for a secondary wave of volatility, this dotted line here, we've broken below there and we've traded not only down there for a few days, but on top of that, it looks like we might start to be treating it as resistance, therefore lowering volatility and giving room for equities to continue climbing higher. This should all bolster and serve as the foundation for Bitcoin to finally start recouping some of its losses against the NASDAQ. We've had a continued decline here of Bitcoin against the NASDAQ since back here in October of 2021, over 44.6% underperforming against the NASDAQ, which already itself has faced some pretty severe punishment in price. But I want to go ahead and again, not focus just here since October. I really want to go big picture here because I understand, guys, that it's always a heated debate and stuff overall. Have we gotten to the absolute lows? Are we in a bear market? All these different terms you can toss at it. But just putting that aside here, I think again what you guys really wonder at the end of the day when we're having these discussions is it a good time to like get out of the market or get into the market? Like, should I be looking to sell more of my positions if I'm already exposed, or simply stay out for a while? Or is it time for me to start going long? Right? Now, again, I would say let's wait until we get out of this channel. Let's wait until we can showcase more solidification of a long-term trend reversal, right? Not waiting too long, but again, waiting for a break out of that channel. I'm again trying to show my neutrality here. I think we have to wait for some kind of trend confirmation before we do anything crazy. But if we're taking a look here at Bitcoin's all-time history against the NASDAQ 100, this is going all the way back to July of 2010. We have more than a decade, 12 years of price action, nearly 12 years of price action to work with here. Take a look here at the 2-week RSI. Now, you guys probably know about the RSI because it's a pretty common oscillator or technical indicator that's utilized within financial markets. And what I think is so fascinating here is when you can utilize these very common indicators, which all the while they can be useful on short-term timeframes as an added tool, I think are a premier tool alongside data science models to utilize on longer-term timeframes. Because smart money is utilizing these indicators, if at all, on longer-term timeframes. And it tells a really incredible story here. The RSI here, which tracks relative strength in the market, it showcases periods where we're oversold or overbought, shows a very interesting trend here for Bitcoin's long-term price action on the 2-week. Going back here since 2015, we have been on a trend of continuous higher lows here within the RSI. We never have gotten back down to the ranges of oversold price action like we saw back in December 2014 going into January 2015. And on top of that as well, not only have we had these higher lows like the bear market lows of December 2018 or the March 2020 correction, or where we are right now in May of 2022, a couple years later, but on top of that as well, we've been seeing lower highs here, right? We're not seeing Bitcoin get as overbought as it was in the past. And this is a really telling story here. It shows us that all the while, over time, we should expect lower and lower gains in Bitcoin's price per cycle. At the same time, we should also expect lower percentage declines. We should see generally less volatility on the long-term time frames. Generally speaking, we should be seeing a wedge here. We should be seeing that we're not getting as overbought as we were in the past, and we're also not getting as oversold. The volatility that once again made Bitcoin so incredibly attractive back in the day, all the while there still will be some, and it will probably still outpace most equity markets. It is probably not going to be as crazy as it once was. And we can see here that this has been over a long period of history here. Again, I just want to, put things in perspective here. This trend has been consistent since as far back as when Bitcoin was trading around the, well, I guess we're not going to see it here on the ratio, but this is when Bitcoin was around $150 to $300 in price. So we're sitting at $30,000. You can see here that this holds a pretty significant amount of weight when it comes to the long-term analysis here. But that's not all. This is one chart here that showcases here that we could be at a solid range here again, not only at a good discount against the NASDAQ historically, but on top of that as well, we also have a very interesting chart of Bitcoin against the money supply. Now, I know a lot of you are keeping an eye on the Fed's balance sheet with talks of quantitative tightening, and no matter if the Fed is reducing its balance sheet or if it's going to start expanding it or if it just sits on its own hands and does nothing, the important thing to focus on here is to take a look at assets against the money supply. It's incredibly important when it comes to looking at equity markets. It's also important here when looking at crypto. Now, albeit it's a little more nuanced here with crypto because crypto has been such an exponential asset that it almost looks like you're looking at the dollar chart. But there is some differences here. You guys will know if you take a look at the normal Bitcoin log chart, it doesn't look exactly like this. There's a bit of deviations here. And it showcases here that over time, like we saw back here in December 2013 to April 2017, right? This was a clear breakout point when we got above this range of the money supply. And on top of that as well, what I think is very significant is that buyers are coming in each and every time here around this range. We haven't had a monthly or weekly close, right, below this range here of the previous 2017 highs since each of these corrections here. And that's a very fascinating thing to focus on. It's not something that can be ignored. We need to understand here that smart money is taking this discount opportunity, at least at the time being, right? That could change eventually. But I think here in the short term, as we've seen time and time again, whether it be here, whether it be back here, or back here, generally as we approach this range here, the 2017 highs, buyers are coming in here. Now, if you look at the standard Bitcoin chart, you wouldn't see this here because we aren't anywhere near the 20K range here. The lowest we went to is 25,000. So if we, for example, just take a look at the BTC USD chart, turn off our drawings here, we can see that it's kind of a ways away here. Why is it that buyers are coming up here? And why are they not waiting for 20K? Well, it has to do with that adjustment in the money supply. Since 2017, there's been a lot of printing. The fact that Bitcoin here is at $31,000 after the Fed has printed so much money since the pandemic, you better bet that smart money is making sure they're not waiting around too long. They've been already setting in their limit orders. They're getting them filled because all the people are panic selling their positions. And on top of that, if they start to get price above this channel, it will move very quick because all those people who had limit orders hoping to get them filled will eventually likely turn into market buyers, and they will buy up the asks on the order book, which all the while there are definitely some are quite thin comparative to history. And we can see here that the market order flow here has been significant here within the market here. The liquidations, the short liquidations are continuing to pick up here. If we take a look at the bookmap indicator here, we're seeing not only a lot of market order flow kick in, but also a lot of these shorts getting liquidated. You can see the green metrics here. We can see that there's 56 short events here, 23, 5 events scattered here across the chart. But we can see that there are a lot more short liquidations at this range versus longs. The longs have been practically flushed out, or the over-leveraged longs, if you will, during that capitulation candle. And when you get this divergence, this difference from longs getting liquidated more, right, going towards shorts getting liquidated more because people are too confidently bearish, that's the kind of dynamic that causes a short squeeze. That's what forces all those individuals out of their positions. I want to go ahead and highlight here by just taking a look at the chart here. If you think about this on a metaphorical sense, there's probably been a lot of trading activity during this range here, right? This kind of sideways capitulation range here that we've seen in price. Probably a lot of people who have not only gotten knocked out of their positions, but with any remaining capital, or those who are in the right in this case, have set a lot more short positions, betting that we're going to go down to 20K. Right, this is exactly what happened here back at this range. People were loading up their shorts here, right, during this entire price range. Sorry for my poor circles here. It's difficult to draw with the mouse. During this whole range here, people were betting we're going to go down to 20K, that price is just going to absolutely collapse. And then they got absolutely squeezed. They got short squeezed out of their positions, driving price back up to those highs. I can tell you guys with sheer confidence that that is a big reason why price was able to do something it hasn't done before, revisit back to its all-time highs. And I would even go to say here, for those of you who define that we've been in a bear market since May of 2021, you might be right in this case. But again, that showcases how incredibly different this market is. We've never come back up to a previous all-time high like that before, especially if we're considering that original top in May of 2021 as the top of the cycle. Not to mention, come up to those highs and even print a higher figure months later. It's only capable because of overt amounts of short positions causing a short squeeze and then another wave of euphoria where market order flow takes control. If we get above this range, a lot of shorts are going to get forced out of their positions, and it wouldn't be crazy to think that you'd come up here in this $40,000 range. I'm not saying that the absolute bottom is in, guys. I don't want to speak too soon. To be honest, we have been humbled a lot by this correction, right? I didn't think we would come down to 25K, even though it was short-lived and we really have only been around this $20,000, $30,000 range, which has been a range we've talked about for a while, right? Call back in December. All the while, We want to keep neutral here and make sure that we don't find ourselves leaning in one direction too substantially just because we're positioned a certain way, or just because we got burnt the other direction and we want a revenge trade. It's not the way to go about financial markets. It will cost you more in the long run than it will benefit you, hands down. I've learned it firsthand. I'm only sharing this here with you guys because I've been through this journey for a long period of time in markets. And I'm not perfect. No one is. But I want to do my best to share that information with you guys. It's why we speak out against using excessive leverage or even leverage trading for that matter. It's why we talk about having a longer term time frame. It is much more likely that you are going to win long term if you just dollar cost average or swing trade and buy in to these historic discounts and have a 1 to 2 to 3 year time frame, and you ignore all the noise, but what the Fed is doing, or what the headlines are saying, or what Jamie Dimon from JP Morgan thinks about Bitcoin. All this stuff is just there to distract you. It's to distract you from the numbers. It's there to distract you from what price is telling you. And we now have to remain vigilant and watch for these levels here. If we can get above this range, I think price has got a lot of room to start rebounding, a couple $1,000s to move from here. From there on out, we'll have to see if the trend can be substantiated. But we're going to be keeping an eye on Bookmap. We're going to be keeping an eye on our partner tool to see whether or not those liquidations are coming through. Now, if you guys are interested to learn a little bit more about Bookmap, we do have a webinar I'm going to be doing today with Bruce, who's one of the people from the Bookmap team. But if you guys are really genuinely interested as well in understanding why I'm more confident than not that we are at kind of a capitulative lows here and that we are going to be expecting a pretty substantial wave of upward price, you guys can always check out the Dash Report. It's our newsletter we write here. I do it all by myself here every single month. We also have mid-month webinars where we go over the state of the market. We'll have one coming up on June 15th where we'll dive through, answer a lot of questions from the community. You guys get access to my percentage portfolio allocation for my trading portfolio, all kinds of different tools and values where the main report covers into all different markets from crypto, equities, commodities, and Forex. You get the whole shebang. And it's a great way, again, if you guys love what I do here on the channel, to get some additional information and insights as to what I'm doing, what I'm watching, and what opportunities there are to chase out there. But if you guys enjoyed this video, consider dropping a like. If you're interested in the Dash Report, check out the link down below in the description. And until the next video, everyone, thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.